And we welcome now Gordon Fellows, president of the Mississippi Bankers Association. Hey, Gordon.
Hey, Gerard. How are you today?
Doing fantastic. Thanks so much for joining us today. So let's kind of do a review of your industry and how it is perceiving the economy at this point. I saw that I think it was one of the big banks, J.P. Morgan, has kind of revised. Oh, it's Bank of America. Bank of America has revised its call for a recession. I think they were leaning more towards we were going to enter a recession, but now they've kind of backed off on that a little bit based on some recent economic and jobs data. However, they are warning, as are many others, about tepid consumer spending. I think the consumers, Gordon, are just tapped out. How is that affecting banks?
Yeah, I think you're right. And a report came out yesterday from the Fed about a slight increase in consumer loan delinquencies. So that kind of points to this too a little bit, that we're beginning to feel the end of a squeeze. Hopefully it's the end, right? I mean, I think all of us are anticipating a rate cut later this year. That means the Federal Reserve is probably likely to lower the Fed funds rate, which hopefully is the beginning of what we've been calling a soft landing, right, for a while here. So this time a year ago, I think we were all worried we'd be in a pretty, there was potential for a pretty significant recession. It appears that that's not going to happen right now. So I think we're all just sort of hoping to be on the plane when it lands, so to speak. So hopefully, in the next few months, we get into a little more economic normalcy. This is all due to the COVID tail, right? I mean, the forced shutdowns, and then the policy responses, and the monetary policy after that. There's just been the pandemic caused a really long economic slide. I don't even want to use the term slide, but just so that had a long runway. And it finally feels like I think we're getting close to the end of it now. So, one thing I think is important too, when we're in an election year, right? And so if the Federal Reserve is going to cut rates, it's a good, important reminder, I think, for us as a country to remember the Fed is supposed to be politically neutral, right? The decision to cut rates ought to be data-based and not policy or politically based. And it appears that they've done a pretty good job, to me, of sort of staying focused on the data. The inflation data that came out today was pretty positive, I think. There'll be some more important, a lot of data coming tomorrow. But I think it's important for us to remember if the rates get cut, it's probably because the data says it's time to cut the rates, not because it's an election year. And it really is the Fed maintaining its independence and making economic-based decisions, not politically expedient decisions, is a pretty important piece of our economic structure.
What do you think to that point there, Gordon? What do you think about Mr. Trump recently floating the idea that perhaps the president should have some say, have some weight in Fed's interest rate and just overall monetary policy making?
Right. Yeah. So, the president gets to appoint the chairman of the Fed and a whole host of Fed governors. And then individually, the Fed is broken into regions, and there's a regional Federal Reserve Bank sort of in every region in the country. And those Federal Reserve banks have boards that are local boards from their regions, and those boards appoint presidents of the Fed banks. And so the Board of Governors and the presidents all have a role in what the interest rate decisions are, right? All, the governors and the local presidents have seats on what's called the Open Markets Committee. And so, those local presidents are beholden to local business people that serve on boards, right? And there are Mississippians that have served on the board of the Atlanta Fed. There are Mississippians that have served on the board of the St. Louis Fed. I think that dynamic is pretty important, right? And so there's local input in the decisions that are made around interest rates, and so sort of centralizing that in one person, no matter who it is or what party it is, I think that would concern me, right? Like the system we have that has a broad regional buy-in and regional input, I think is really important. So keeping the decisions on monetary policy independent from politics and making the right decision for the economy, I think is an important feature of the way our economy is set up, and it's something we all ought to be mindful of and maintaining that independence.
I'm learning something from you, Gordon, that I got to admit I wasn't aware of, that these governors that are appointed actually have boards that they work with.
Yeah. So
it's they don't just
the local presidents, right? So it's
okay.
the Fed Atlanta president, the Fed St. Louis president. We're a split Fed state, kind of Highway 82 in north is Fed St. Louis, Highway 82 in south is Fed Atlanta, so their presidents that are appointed by the boards of those regional banks, and the boards include business people. So there's been bankers from Jackson before that have served on the board of the Fed Atlanta. There have been bankers from Tupelo and other business people from North Mississippi that have served on the board of the Fed St. Louis. And they have a direct relationship with people that have seats on the Open Market Committee.
Okay. Well, so the point is there's besides just the governors, the chairman, and the large staff of economists that at their disposal that work for the Fed, they're getting a lot of input from the field on these decisions on monetary policy, and that's important. My concern would be that, as you indicated when we started talking about this, that the Fed is supposed to be somewhat independent and apolitical, that if we started to allow, I guess, the president to participate in those decisions, it in fact becomes political.
That's right. Yeah, that's right. And political motives aren't always the same as economic motives, right? The motivating factors around elections aren't always the same about what's best for, we were talking about consumers and consumer credit earlier, right? Sometimes a political factor might create some incentives that aren't really the best economic incentives, right? You can kind of think about housing policy in the 90s as an example of that. So, maintaining independence of the economy and of the monetary environment, I think is a really important feature of the American system. It's helped our economy sort of grow to be the most dominant economy in the world, and we need to maintain that independence. It's important to think about that. It's easy to get swept up in the election sort of rhetoric, but it's important to remember monetary policy really needs to be a broad and independent exercise, not a centralized and individual exercise.
Totally separate from fiscal policy, as it should be. We elect people to make fiscal policy for us. So credit quality. Always an issue, something that banks are constantly monitoring. We got record credit card debt out there right now. You guys are aware of that, and I think saw a couple of weeks ago, Gordon, if I'm not mistaken, was it Citibank and Bank of America who boosted their bad debt reserves? Credit card bad debt reserves are huge operators in that space, significantly anticipating that, folks have been using the plastic a lot, and of course we've got still rather trying economic conditions. We might be on the lookout for default. What do you see in Mississippi, and what are your members talking about with respect to that?
So this is going to sound like a dodge, and I don't mean it to be a dodge, but the banks in Mississippi are reserving more for fraud losses than for credit losses, right? We're seeing a whole bunch of check fraud, a whole bunch of wire fraud, a whole bunch of online fraud. And so when you kind of look at what banks are setting aside for losses, that fraud loss number in Mississippi is a lot higher right now than the credit loss number. We hadn't really seen a whole lot of deterioration of credit quality in Mississippi, but we are seeing a whole bunch of fraud, and people are stealing checks out of the mail. They're wiping, they're washing them.
Unbelievable.
It's old school physical check
God.
fraud. It's been a real problem for
We
a
got a
number of
break.
months now.
Can you hang around? We got a break. We can keep talking.
Sure.
All right, we got Gordon Fellows, president of the Mississippi Bankers Association, on the line with us on Midday. Stay with us. We're visiting with Gordon Fellows, president of the Mississippi Bankers Association. So just one final question I want to throw at you, Gordon, just to see if you've ever heard this tossed around in your world of bankers and financial institution executives, and that is, the Fed, on the subject of the Fed, it's highly speculative. I mean, there's no formula they use. They have a so-called mandate, a dual mandate, employment in stable money, essentially, stable pricing, I should say, not money, pricing. But it's sort of a guessing game, and that's clear because you remember early on when we started seeing inflation cropping up. And they were convinced, as was Secretary of the Treasury Janet Yellen, this is transitory, no big deal, we don't have to do anything. And then all of a sudden it kept gaining and gaining steam, inflation did. Boom, the Fed reacts and starts boosting rates. We got, 11 rate increases, and that's where we've landed, been there for a while. And here's where I'm going with this. Given that this is a subjective call, it's not really an objective call, it's a subjective call. Now, they have so-called targets, but it's not like law. They don't have law that says you got to make sure inflation's 2%, and you got to implement monetary policy to accommodate and facilitate that. Perhaps, is there ever been any thoughts about maybe indexing it, tying it to some metrics that, when the numbers are at this level, then the Fed funds rate needs to be here. And then we just make adjustments based on that, tied to something more definitive.
I've never been a part of a conversation like that. I think our industry assumption is that, the standard inflationary target is 2%, and we all kind of plan around that. And there's some stability in that, even though maybe that's a subjective target, right? It is a stable target. It doesn't move a whole lot. And so that stability is helpful. One other thing about the Fed, too, people tend to forget this. They have the monetary policy piece, and that has the dual mandate you're reflecting, or you're talking about. It's the inflation on one hand and workforce on the other. What's the employment rate?
Yeah.
They also have a bank regulatory piece, right? So they are a bank regulator, right? And it's those local banks, the Atlanta Bank and the St. Louis Bank in Mississippi, the Atlanta Fed, the St. Louis Fed, that are sending examiners into local banks in the state, right? Along with the state banking department and the FDIC, right? So that local bank exam process gives them a lot of deep dive into what's going on locally in the economies too, right? And so those are separate tracks, right? The regulatory track and the monetary policy track. Data that they pull from the regulator side, it impacts the way they think about inflation too, I think. It is there are several layers here, I guess is what I'm saying. And so sometimes it can feel like that 2% target is kind of arbitrary. But you need to talk to an economist about why they set it at 2%, but I feel like there's a whole bunch of layers around why they set it at 2%. I hope that makes sense.
When you think about your college days and certain courses you took and what you sort of took away from that, the one thing that I think I can just remember so vividly was exactly what we were talking about is this Fed 2% target rate, and as I believe, 4% unemployment has always been the target, right?
Yeah.
Is that your understanding?
Right.
And that was referred to. Now, this was back in the 70s when I was studying economics, but that was referred to as the natural rate, is what they called it back then, the natural rate of unemployment.
Yeah, that's right. And, I do think that unemployment, that unemployment number is influenced by what does it actually mean to be fully employed in America, right?
Yes.
What's a fully employed workforce and how many people is that? And that number shifts, right, as people retire and new people enter the workforce. And so there's a little more flexibility, I think, on that side of, how several different ways to sort of slice the metrics and kind of try to figure out, are we at a point where we have maximum workforce participation? That, which is one of their goals, right? So they have a hard job, these Fed governors. There will be one of the Fed governors, Governor Bowman, will be in Mississippi later this year for the Ole Miss Bank Symposium. And we've had meetings with her several times. She's a super insightful lady. Maybe you'll get a chance to talk to her when she's in Mississippi.
That'd be great.
This year.
Yeah, we're doing the show up there again. So let's pivot a bit here. The USDA is awarding money. It's really from a discrimination suit that was filed, I believe. I think that was the ultimate driver of this. But the bottom line is some $500 million is going to be dispersed to minority farmers in the state of Mississippi, some 13,000. Gordon, we heard that some of the banks were being presented with checks from these recipients, and they're looking for cash for those checks, and this was causing a problem for some of the banks. Is there any truth to this? What are you hearing?
Yeah, so the awards were actually funded by Congress, right?
Okay.
And through the Inflation Reduction Act, and then there was litigation around whether or not Congress had the authority to set up an award like that. So there's been a congressional piece of it, there's been a litigation piece of it, and then the administrative piece of it. So sort of all three branches of the federal government have been involved in this.
Gotcha.
Yeah, it's a lot of money coming to Mississippi. Certainly, there are going to be a bunch of people that benefit from that. The challenge for, there's been a little bit of a logistical challenge for banks, but it hasn't been a significant problem. It's just a sort of, because the litigation slowed the process down so much, once it got finalized, I think USDA wanted to get the money out the door. And so they pushed it out as fast as they could. It was sort of like, okay, these awards are going to get awarded. The checks are going out tomorrow. Some people are getting really big checks, and so the banks didn't have time to sort of bulk up their cash, right? So, but I think most of that has sort of been handled now, it's a good reminder of why relationship banking like we have in Mississippi really matters, right? The fact that the bankers have a deep understanding of the people coming in, making the deposits business, sort of allows them to move faster than maybe some non-relationship banking institutions would. So I think we've worked through most of the logistical problems. It was just sort of like this happened really fast. The money's here already, kind of issue. And sometimes that happens with government programs.
Yeah, total of $2 billion. And you're right, I'd forgotten the sequence there came from the Inflation Reduction Act. And as I recall, originally it was to be dispersed. This money was to be dispersed in sort of a fashion that favored black farmers, and I think there was a lawsuit around that, was there not? Where
that's right.
I guess some other farmers claimed that was discrimination. But this $2 billion is going to minorities, and the report is, and in fact, Congressman Benny Thompson, whose district will receive the lion's share of this money, he is reporting on his website $500 million, 13,000 farmers, to Mississippi farmers.
The state of the farmers in Mississippi will receive the most money of any state, right?
Right.
And it's not. Yes, there are a lot of farmers in the Delta that are receiving funds, but I've gotten calls from banks all over the state about it, right? So because it happened so fast, it was sort of like, oh, this guy just brought in a check. Is this a real program? I didn't know this program existed. So yeah, it's a real program. The check is real. You go through your normal government check verification process, just like you would with any a tax refund check or anything else that the Treasury would issue. And help take care of your customers, and that's really what Mississippi banks are about, right? Taking care of their customers. So it's been a real windfall for a lot of folks, but it's been an opportunity for banks to re-engage their processes for verifying government checks, which is sometimes something that we don't do all the time. So it's a good opportunity to sort of sharpen those skills a little bit.
One other thing before we go, I got to ask you about, and I caught this in rather hurried fashion, so I'm asking you to verify it, is a new Consumer Finance Protection Bureau rule that would require banks to let customers talk to a human just by pressing one button when they call the bank. You know anything about that?
So there are a whole bunch of proposed CFPB rules around consumer interaction with institutions and around consumer data portability. And they're all kind of rolled into one thing, and we're still trying to get our hands wrapped around what that is going to actually mean in functional practice. It's
we got to go,
stuff,
but
for sure.
Well, okay, great. We'll have you come on again when you got more information, but it sounds like they're working towards this end at least. Gordon, always good to talk to you. Appreciate it, man. Thanks.
Yeah, always good to chat. Thanks for having me on.
We're coming right back, folks, in the Element Wealth studio.